Hello, you're watching Proactive London. I'm joined by Eitan Uliel, the CEO of Challenger Energy Group. Eitan, great to have you on the show today again. And we're talking about your 2023 annual results, and you described it as a period of excellent progress. Take us through some of the highlights.
Well, hi, good morning. Nice to be here. Well, look, 2023 was a year of excellent progress. We've made great progress in Uruguay. We did some really good technical work on our Area F1 block, which then led to what I would say is a market-leading farm out to Chevron of that block. We secured a second block in Uruguay F3, which has enormous potential in the coming 12 months. We made solid progress in Trinidad. It would have been nice to say we cracked the code and figured out how to make that into the business we want, but we did complete a couple of asset sales as promised. We've got the business into a shape where it's operating on basically a cash flow break-even basis. We've made really good use of the cash we've had. We've reduced our costs across the board. So, a year of great progress, steady, measured progress, but all, leading towards what we hope will be a great 2024 and 2025.
We'll get back to that in just a moment. So let's go back to Area F1 in Uruguay. What's happening there at the moment following that farm out to Chevron?
In a technical sense, we're waiting for the farm out to be approved by the Uruguayan government. I get messages all the time from shareholders. When is this going to happen? When is this going to happen? I wish I could say tomorrow or next week. These are bureaucratic formalities that frequently take months. And as we said in our annual report, we really hope it'll all be sorted out in the coming months. There's no blockages. There's no practical issues. It's just process, which I tear my hair out over, but it is what it is. The more important thing, though, is Chevron are planning a work program. They're planning to start 3D seismic acquisition at the end of this year or early next year. That will mean we'll have some really interesting new data by the middle of next year, which informs well drilling decisions. So whether the technical approval of the farm out takes another month or two really is irrelevant, as long as it's all sorted out in time to enable that 3D seismic program to proceed. But progress with Area F1 is fantastic. It's exactly as we would have hoped. We've delivered what we said we would deliver there, which is this farm out, and so onwards and upwards there.
And that second block where you had the deal with Charleston Investments, take us through the way forward for that following the investment from Charleston.
Well, Charlestown's investment is in Challenger as a whole. They saw what we did with F1. They saw the deal we did with Chevron. They saw we picked up Block 3. And so they are a very well-regarded specialist energy investor out of New York. And they said, right, well, you're now in the right place. You've done all the hard work. We want to become shareholders. So the investment from them was actually an investment in the company as a whole. As far as F3 is concerned, the first exploration period there has literally just commenced. We've already begun the process of securing legacy 3D seismic data, which will be reprocessed and reinterpreted. That's a work program that will take 6 to 9 months to complete. At the end of which, similar to what we did with Area F1, we expect we'll have some interesting new data. We'll be able to put some updated volumetric assessments on the block. Hopefully, we'll have some good results from the AVO analysis, and that will enable us to kick off a formal farming process. Again, something that we hope will happen in the first half of 2025. And again, if the Area F1 model is anything to go by, it'll take 6 to 9 months to get a partner in place, and that then paves the way for further work. In the case of F3, probably drilling of a well straight away.
So you must be sitting pretty as far as finances go at this stage then, Eitan, because you'll get that $12.5 million from Chevron once the farm-in is completed, but you also ended the period with a good cash position.
Yeah, and our overhead is very low. One of the things I focused on very hard as CEO in the last few years is just ripping the costs out of everything. So we've got it to a point now where I think the basic costs of staying in business are covered. We're not spending excessive amounts of money. We compare very, very favorably to what other peer companies spend in terms of G&A. And, once we get that 12.5 million in from Chevron, we have some fees to pay, etc. But ultimately, 12.5 million comes in the door. We have an annual overhead of around $2 million a year. We don't have to spend anything on the 3D seismic at Area OFF-1 because that's covered under the terms of the Chevron deal. We have some work in Area OFF-3, which will come to about $1 million in total. And Trinidad operates on a self-sustaining basis. So you can do the math and you'll see that we're fully funded. We will have more than enough cash to keep this company going for many years without the need to raise more money externally, which is something I know shareholders want, and gives us ample time to see how OFF-1 and OFF-3 develop. And the other thing is we have 100% of OFF-3 pending whatever comes in a farm out process. Post the Chevron deal, we retain 40% of OFF-1, so we have an asset that we can continue to trade and, depending on what happens in the future. So as I said in our annual report, and I'll repeat it again, from a corporate perspective, we're in the best position we've been in for years. And the coming 18 months will be really exciting and interesting for us as a company, for Uruguay as a country. So we're looking forward to the journey.
Well, Eitan, I hope you'll keep us informed as you continue that journey. Thank you very much for the update today.
Great. Thanks for your time. Bye.
Eitan Uliel is the CEO of Challenger Energy Group.